The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Well, in this episode, we are going to take another look at a couple of interesting growth and income stocks with the editor of our Income Investor Service, Brian Hamilton. And you've got a little bit of an unlikely combination of companies here, a drug company and an airline.
Yeah, there's not too much correlation there, but they actually do have a couple things in common. They both recently reported solid earnings reports. They both have a Zacks rank number 2, and the tax law is going to be benefited in both of these companies.
Oh.
But I'll talk about Pfizer first. They had a really solid earnings report where they beat both top and bottom line expectations. Management also announced a $5 billion share repurchase program, and they announced that their tax rate is going to drop from 23% to 17% due to the tax law. Now, 5% is huge when you're talking billions of dollars. Management also increased their quarterly dividend payment by 6.3%. But what's really more important is they have a really strong pipeline of drugs that are coming out. Specifically, their new arthritis and their oncology drugs are what's going to be really driving the company for the next several years. And specifically, their new breast cancer drug is expected to generate about $6 billion in annual sales by 2020.
Wow.
Yeah. So all this great news has caused analyst estimates to improve as of late. And if we take a look at our detailed estimates page here, we can see we have a solid unanimous agreement on the upside for fiscal year 2018 and fiscal year 2019. And over the last 60 days, the next 2 quarters have seen improvements as well. And as you can see here, more specifically on the annual rate here. Pfizer also has been paying a dividend since 1901. And over the last 9 years, they've actually increased that dividend payout. And they're currently giving about a 3.7% annualized dividend yield. Wow. But these tax savings are expected to cause the company to increase their big share repurchase program and dividend payments going forward. So we have a really nice, strong pipeline of drugs with the company and some potential upside on the share repurchase and the dividend side.
All right, the airline that you alluded to is Delta. Their shares have outperformed their industry over the past year.
Well, Delta has really benefited from an improvement in both business and leisure travel. Now, they recently reported earnings as well, where we beat the Zacks consensus earning and revenue estimates for the second consecutive quarter. But what was really impressive was the improvement in revenues. Overall, it was up a little above 8%, but both passenger and cargo revenues were above expectations. And they have this other revenues category that was up almost 17%, which was well above expectations. In there is a really interesting aspect of Delta that most people don't really correlate with an airline, is their agreement with American Express. Now, there's the Delta American Express credit card that saw about $80 billion in charges in 2017. Of that, just under $2 billion went back to Delta in the form of fees. Now, this agreement is expected to see the fees jump to about $2.7 billion by 2020. Now, also during their earnings report, they announced that they're increasing their EPS estimates for fiscal year 2018 by between $1 and $1.25, almost solely due to the tax reform plan that we were talking about before. They also increased their Q1 EPS estimates due to the revenue per available seat mile improvement. Again, that goes back to the improvements in both business and leisure travel. And if we take a look at their price and consensus graph here, as we were talking about earlier, they have been doing really well as late. We can see the nice upwardly trend here, and we have an increases in annual estimates, which gives us our solid growth story as well. And the company pays a nice 2.17% annual dividend as well. So we have these really good revenue stream through the American Express, and we have improvements in overall travel and a solid 2.17% annual dividend.
Interesting.
Yeah.
Do you own either one?
Personally, no, but I have Pfizer in the income investor portfolio.
All right, thanks for that. Don't forget, always more stock information on our website, Zacks.com. Get on over to the homepage and check it all out. With Brian, I'm Terry Ruffalo.